Good morning, everyone. It is Friday, January 7th, 2022, and this is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I am with Nadex. With me is Brian Caprice from Keep Trading Simple, and we are going to look at some hot spots in the markets this morning and what we've got happening today. We do have some things going on. One, we just had those non-farm payroll numbers come out. Canada also released their employment change numbers. Canada adding jobs. U.S. we were earlier in the week. It was expected the number would come in at 400,000 non-farm payrolls. It adjusted up a little bit to 426,000 is the expectation after the ADP numbers came out earlier in the week and absolutely blew it out. And we missed monstrously. We came in under 200,000 jobs on the non-farm payrolls, and that has sent gold on a bit of a wild ride. It has sent the dollar on a bit of a wild ride, and we're seeing equities that were slightly in the green going into the number selling off. Certainly a surprise number, and not so much in a good way. But before we jump into that and to do some analysis around that, and we take a look at the dollar charts and the gold chart, and then even equities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, right, I actually have, let's look at the euro US dollar. I'm just going to take in the 15 minutes right after that number came out, 1, 2, 3, 4, 5, 6, 7, 8 short duration binary options. I mean, you could look at the wick on this was kind of crazy, but we had, and Brian, I'm actually gonna flip it over to you. Let's walk through the numbers and then let's walk through these charts because each one of them, they were all over the place. And the Canadian US dollar really is surprising me and on how that has played out. But let's get into it.
Yeah. So again, I do 2 sessions in the morning, so sometimes I forget which one we mentioned it on. But we talked about how the Canadian economy was looking great. Don't be surprised that this is at a 5.9, and it did. Canadian data was great. Dollar CAD is down over the last 24 hours, and again, this one has kind of been, in the last 24 hours it's down, but there's not a gigantic move from non-farm, so it's kind of interesting, and it's kind of almost decoupled itself. The reason I'm giving you guys that warning real quick is because with oil. Basically, oil has been doing nothing but going up over the last week, and the dollar CAD has not been following suit on that one. So a lot of times on this channel, we'll talk about how some of the currencies are proxies for other tools, like the dollar CAD. Typically, it's associated with oil. It has decoupled a little bit, so be cautious out there with that. Canadian data was great. I expected this one. I've gone on record said that I think Canada will be one of the next countries that actually rises. I think they will beat the United States to a rise. And again. They say, what's that based on? Just numbers, with my wife and my wife's family being up there from Vancouver and seeing their property taxes and what their values and everything are projected with this year. And they're starting to roll. They are just really starting to kick on all cylinders. So I think they're coming back again. Our numbers today are a little bit strange. And again, there's some good and there's some bad in this. And again, if you look at any of the wicks for the non-farm payroll number, they spike up, they spike down, and then they kind of close right back in the same little area. Which again, is basically looking at these numbers. It's very difficult. Starting with the top one, the average earnings up 0.6%. That's great. That means again we were getting paid a little bit more during the holiday time frame, and again it's supposed to be 0.4. So that's great because we know inflation is crazy, right? With the 39-year highs, the non-farm number came in less than half. Now. This is something that is actually not totally surprising. And again, looking at these numbers month after month, and again, it's something that you should track when you're going to trade a release. December, we had the same exact scenario where it was expected to be 553, came in at 200. November, they would miss to the top side a little bit, but October, less than half. September, basically 1/3, right? So we're seeing big ADP numbers on Wednesday, followed by disappointing numbers on Friday, and that tends to be somewhat of a trend that we see here now.
By the way, I just want to kind of point something out real quickly, just because you're mentioning that. Nadex does have these event contracts. Let me drop this over here, where you can actually make a prediction on the non-farm payrolls and some other of these. What was interesting was the the strike at the strike prices. I mean, it was really they were calling for 400,000, above 400,000. I think it was north of 60%. I mean, the fact that they've missed so grossly, there was opportunity to make a prediction against the forecasters. The odds would have told you it wasn't in your favor, but yeah, the last couple of reports, they haven't been very good at predicting these numbers or
Mm-mm.
forecasting them. So
No.
it's
And
been
so,
bad.
yeah, I mean, and again, not going forward, there's no crystal ball. It's not to say it's going to happen again, but the reality is it's happened multiple times at this point. So it's definitely something you need to watch out for when we have a big blowout number. And again, this is what we see a lot of times: big blowouts, things reverse, right? Big blowouts, we circle about it all the time. And at the same time, and Todd and I were joking about it, unemployment rate came down to 3.9. It dropped another 0.2. It's kind of, it's one of those things.
Hey.
Years ago, 10 years back, you would have been celebrating, oh my God, this is the best unemployment rate ever. And you may say, well, how the heck is this going down? We had the great layoff, right? Or the great, whatever it's called, the great quitting or whatever. I forget.
Yeah,
November.
the great quit. Yeah, the great resignation.
Yeah, the great resignation. Yeah. And you may say, well, wait a second, how is this happening? Remember, this number, after you've been out for a year, you're no longer included in the number. So the number is not really as accurate as people think that it is. They see this and like, this is great. And the politicians are going to pat themselves on the back, but it's like, hey, we're hiring back a whole lot less people than you think. People are changing jobs left and right. This is not a gauge of how great we're doing. It's a gauge of how the number is actually created. And it just shows that, again, there are flaws in a lot of the data that they're using to try to get the most accurate, up-to-date information. So, again, the politicians out there can be like, oh, this is great. Look at this 3.9. It's the best it's ever been. Yeah, but what's the workforce utilization rate? And those are the real big factors. I mean, this 3.9 by itself should have skyrocketed the markets. And the exact opposite is what happened. Everything was green before we started. Now we're red across the board. The dollar's down. The ES, the NQ, Russell, they're all down. I mean, the NQ is fighting back a little bit, but it's down 0.5%. It was up 0.5% before all this started. So, VIX is obviously spiking because of the number. You have oil continuing to rise. The currencies are down. The cryptos are getting crushed. Bitcoin down at 41,000, Ethereum down another 7% today, as risk is coming out of those. So it's these numbers are extremely important, but understand the big drivers are one is going to be inflation. And we do have kind of an update on the inflation front. It's great that we're getting paid more, but now we've actually seen some data. ECB's Lane says he sees inflation falling later this year. There's only one way that inflation is going to fall this year, which should be the rising interest rate environment. And he talks about how, we've broken the 5%. We expected it to be 4.7, so we missed. It's mostly in energy prices, 26%, accounted for over half of it. Inflation in Ireland is at 5.7%.
Oil up at $80 a barrel. It'll do that.
Yeah, so it's just another one of those things I mentioned. 2022 is going to be all about currencies, all about interest rates. The only way that you're going to crush inflation is not by doing nothing. We did nothing right now, and that's why we're at 39-year highs. It's not going to be lost on any of the experts out there, the financial wizards out there.
And the Fed told us that, from the minutes. They're not only are they going to jack rates up, they're going to do so at a quicker pace. The timing between liftoff between when they start stop doing their purchases and raise interest rates. There's usually a waiting period between some of that, so they can let it take effect. They're actually going to be doing those things concurrently. I mean, it looks like. Really close.
And like I said, we don't know what's going to happen. We know that the labor market is now fixed. And remember, they're always like lagging behind a little bit. Remember I said that, now they're saying that there's 2 raises this year. I'm still not in the camp that we're not going to get a double in that first raise, just because we got to put an end to this very quickly. I mean, with with 3.9%, demand going higher, oil's already $8 a barrel. Demand is going to drive this even higher. Inflation's going to get even worse with it. Omicron's not the threat that we thought that it was. What's the stop inflation right now? Unless you keep, unless you really put a damper on things.
So let's jump into these charts and take a look at some of the. I don't know. Where do you want to? You want to start with gold, or you want to start with the dollar?
I mean, really, either one. I mean, the dollar. The dollar index. You can see the whipsaw back and forth. People are looking at this number today and like, I don't know what the heck to do with this. I mean, we know inflation is high. We're not hiring as much people, but it's not a negative number. People are not losing their jobs because the unemployment rate went down. What the heck do we do with this? The dollar is a very interesting position where it is right now. I mean, we talked about it up. It's been more or less sideways. You're seeing it kind of spike around, and it's not really giving you a true direction because it is a mixed number. It's red, but it is a positive number, and then the unemployment rate comes down. So it's very, very confusing for big money out there. Like I said, FOMC kind of gives you a hangover for a little while, like a financial hangover, because they've told you what's going to happen. We don't know exactly what it's going to be and exactly when it's going to be, but we kind of have ideas. And remember, that is a major shift of money that needs to be moved around. And we're seeing it right now. We're seeing it in a lot of the different, risk assets out there. But at the end of the day, as you're cycling some things out, if it's not the exact time, they just hold it in cash. They don't push it back to the other side yet. So we're not quite there yet, but things are starting to roll. So dollar's a little bit hard, and really, pick any of the currencies. We can, look at Aussie dollar. We were all the way down, and we actually had a buying area that we missed by just a little bit. But you may say, well, wait a second, this is bad. Why the heck is this? Why is this a red candle? Technically, again, we're getting paid more money, which is great. When we get paid more, we spend more, and again, the 3.9 people will look at it. So, and again, 200,000, it's higher job. So it's one of those things. I would say it is a dollar strongest day.
Yeah, I was going to say, I want to look, because I want to talk about the dollar CAD, mostly because there's such an out trade. We saw immediate strength in the Canadian dollar, as you should when their numbers are good.
Yeah.
We saw weakness in the US dollar, as we should, because our number came in so poor. But if you look at the candle that actually, you see people are coming in. They're coming in to sell. There are sellers. But that candle actually ended up being green. The wick on this thing, they sold it, and it ended up closing higher than where it opened. And then the very next candle, they tried to sell it again, and they're still trying to. Buyers keep coming in, supporting the dollar, and it's just kind of, it's backwards, particularly with oil where it is.
Well, yeah, dollar index wise, we know that there's not a big change. Dollar CAD wise, you're seeing that same push. So, and the problem is, it's in reality, okay, the truth of it is technically a strong dollar release. It is a red number, but there's two other factors in there. One of the three was not perfect, but it was not bad. It was less than expected, but still positive. It was a negative number. We were losing jobs in non-farm payroll.
Right.
That would be different. So it is technically positive, and then they're going to factor that in with the other two releases that were both green. That's kind of why it's holding. And again, we already know, at this point, with FOMC saying, we're raising rates, we're going to probably do it this many times, or it's going to be stronger there. Remember, FOMC is what's about to happen. It's foreshadowing what's going to be in the future. Non-farm payroll is something that's already happened in the past. So if you judge the two, that one is more important. So this is strong CAD versus strong dollar is what we're seeing. It is why there's the disconnect here.
Right.
With that, again, that's why I was over on the oil chart. You can see, this week, this one is really, since the 31st, it's a nothing but really rally up. This week, it rallied up, and then on the 6th, it did start to roll back a little bit, right? We retraced a little bit of that movement, and then we kind of just stabilized. Looking at oil's the nothing but goes straight up. So this is, CAD should have been receiving strength all week, just that the dollar is so much more of an attractive target, and this is where people really don't understand.
Right.
The dollar is one of the most important things in the world. There's no ifs, ands, or buts about it. There's no discussion about it. The reason why you're seeing the destruction in the cryptos right now is because with the Fed wanting to raise rates, okay, it is becoming attractive for everybody out there. You get nothing for holding Bitcoin. You do get something if you hold dollars. There's interest. When they start raising that interest, it becomes more attractive. It's why we're seeing gold. Gold at the same time. We were going to talk about gold anyway. Why is gold all the way back down here? And by the way, we talked about the 1782. We did hit it. We rallied all the way back up 7 points up already from that actual gold release. Actually, you guys can see it came down, it touched it, and then rallied all the way back up again. So you had a 1 to 3 on this one if you guys were watching yesterday. But this is the thing that people need to understand is once we start raising interest rates, and it's not just us, it's going to be the euro, it's going to be the CAD, everybody out there is going to start raising interest rates. The currencies become a lot more attractive. People start putting on new trades. Carry trades haven't existed. There's a lot going on out there.
The carry trade's going to come back, isn't it?
Yeah, it absolutely will. Because again, we know that the yen has been getting just absolutely demolished. It's getting cheap, which is awesome. That's what people want. The question is who is going to lead the carry trade out there? It was typically the pound, but right now it actually may be the United States. It may be New Zealand. It may become the New Zealand yen as the carry trade. So there's so much kind of potential coming in this year, but it just goes to show you that although oil, and again, this is 5 minutes, so it's all over the place, the CAD, although dollar CAD is spiking back and forth, it is now decoupled from oil because, again, it's strong CAD versus strong dollar. But even with all the factors and how strong oil is,
winning.
The dollar is winning. The dollar is winning. So, and again, I always say right now, too, just so again, we're talking about oil, this is, to me, actually, this is more negative news for oil. I know it's like, oh, it's demand, it's demand, it's demand, it's demand. Oil is having a very, very difficult time with this 1850 with the pullback. And again, remember, there is a demand aspect to this. The unemployment rate coming down is good, but it's like, wait a second, there's 200,000 less people working. Maybe we don't have as much demand. And we've been on such a run up all week. It's probably due for a bit of a pullback. So it's kind of more of a negative release for oil. It's up a little bit right now by 0.24. If we don't have an initial kind of spike or like a little confirmation that we're going higher at the open at 9:30, I think this one closes down a little bit today. Just because, again, less people working, it's less people than they were forecast out there. It should be lower demand, and with the fact that BCB says that energy costs are a serious concern,
and they're gonna right. It's the biggest biggest chunk of inflation that we're seeing
across the board. Yeah,
for everyone.
So, yep, yeah. And again, natural gas, as I mentioned yesterday. Again, I'm sitting under another 4 inches or 6 inches of snow. The kids are off school again. You can see that this is starting to spike as well. Again, U.S. Trader comes online, great data, punching up higher. It will probably reverse a little bit, but I think natural gas goes a little bit higher too. So there's so many factors out there.
The background behind me that I've got is Chicago. It's -2 degrees outside right now, and that's without the wind chill.
Right? Without the wind chill.
We're gonna dip into one of those days where you can do those really fun science experiments. Take a cup of absolutely boiling water, make sure no one's in your way, and you throw it up in the air, and it immediately turns into steam. Although it's burning steam, so people got to be very careful. But it's fun science experiments when it gets this cold.
And the way I'd be looking to trade this to the open, even unfortunately on the 15-minute, even some of the candles aren't great. A lot of them are retracing a little bit. What I would do is, if you guys are looking for something kind of fancy to trade at the open, the 50% is right in the middle of the large candle from non-farm. If you take it from the high to low.
What do we? You're looking at the Nasdaq, yes?
At NQ, yeah, they're all. I mean, I can do it on any of them. They're all basically the same. Here's the ES 500. Draw some fibs on there and see where those 50% are. And again, the reason I say use 50s, the ES actually is interesting because it's a level that we've looked at before, right around this 46.86 area. Look for the 50% retracements at the open. We got 28 minutes to go. There's plenty of time for us to retrace kind of the negativity. Remember, the retail trader has not traded non-farm payroll yet. Right now, it's just been more or less the futures traders out there. So, question is, are they going to harp on the enormous miss, the less than half, or are they going to focus on the 3.9? With a pullback, if we have any type of stabilization, especially on a 5-minute candle, this could be a great little opening, short on all these different positions out here. And like I said, not that it's really a horrible one, but a lot of times people get so focused on this non-farm payroll number, especially because it was such a huge difference from what we saw earlier in the week. Again, the one shining note is that at least they're paying people more. But I would say at the open, look for these things to pull back. If they can get up into the 50s and start stabilizing around the open at 9:30, there's probably decent levels of shorts. Just to take advantage of that initial kind of, oh my God, this is so bad, we missed non-farm payroll. But and I mean, the reality is, if you look at it all day, it's like I wouldn't be hesitant to get long these positions. I mean, overall, it's not. It's not a horrible day. The state is not that bad.
There is a disconnect between the economy again, and then you look at corporate earnings, and
they're great. So we didn't run out of toys at Christmas.
No,
we didn't run out of toys.
No, so definitely kind of interesting markets. Lots of volatility creates lots of trading opportunity. All right, with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. It is going to be an interesting day today to see how the retail trader digests all of this with the miss in non-farm payrolls. I mean, honestly, I was kind of surprised that it came in under 200,000, but we see the unemployment rate dropping as well. Now, we talked about that. That's part of that's probably factored into the way the numbers calculated, because people, it's been a bizarre 2 years, the Great Resignation, and there's a lot of people out there who just aren't going back to work until maybe
think about what did January 2021 look like? That's what you got to think of. That's the people that are starting to get taken out. It would have been Christmas of last year.
Yeah.
that these people would have been coming out from.
And
So if
they're
you
not
think
even
about the
in those
year,
numbers anymore. So
yep, yep,
we did see some, we're seeing the dollar moving all over the place. We're seeing some opportunity with gold, and as we're also seeing it in the equities, right? Equities going from
yeah,
green
they're
to
all
red,
they,
and they're trying to come back a bit. So definitely some trading
yeah.
opportunity. Take a look for that short term price action. The Nadex binary options, one way to play in those markets. Brian and I will be back on Monday morning. I want everyone to stay safe and warm, and want to wish everyone good luck in the markets. Thanks for joining. We'll catch you Monday.